It's not too late. These are just starting to warm up, and I could see gold reaching $10,000 an ounce quicker than people think. This is my Mama Pamp Suisse Gold bar. She's a big girl. She's thick, as you can see. I call her Pam. And here's a few of her kids. We got Paul, we got Pete, and we got Patty. Of course, there's many other members of the family, but they get the spotlight today. Look, it's time to get serious. If you aren't adding these to your portfolio, you're about to miss out on what I think is going to be one of the largest returns on gold and silver we've ever seen. And this isn't based off like some feeling I'm getting inside, right? It's not like based off some warm and fuzzy feeling. I mean, anyways, my wife tells me I'm horrible at feelings, so if I went off feelings, it probably wouldn't work out too well for me. I'm going off of facts, and I'm going off of history. I'm going to give you hard proof from multiple angles how these are about to explode. Let's start with a very brief history of money and precious metals. I think history is awesome. Love history. But if history bores you, bear with me, because what I'm going to show you could have a significant impact on the value of your investments. And I know I joke around a lot on here, but I'm being dead serious. This is really important. We could be talking about the difference between you losing 80% of your retirement savings or possibly 5 to 10xing your investments or more, so please be patient. I'll make this quick and painless. I feel like I heard those words from my wife on my wedding day. Marriage definitely has not been quick, and it has not been painless. Just kidding, honey. So, precious metals were first used as money in 7th century BC. They were used before that, of course, as far back as the Egyptian times, but the use for actual money started in 7th century BC in Lydia. It progressed to ancient Greece, Persia, the Roman Empire, you got both Eastern and Western, China, and eventually it spread globally. You see, most people don't understand why precious metals are so valuable. Of course, they have practical uses, right? I think most people understand that. They're used in things like electronics, solar panels, dentistry, water purification, photography, medicine, a bunch of other stuff. But this isn't really what makes precious metals so valuable. It helps, but it's not the main thing. What makes precious metals so valuable is the stabilization it provides for monetary systems. Since precious metals were introduced as money back in Lydia, there's been a consistent trend in history. When empires stick to precious metals 100% as their form of money, they prosper. The economy does great. And if you don't believe me, look, this is all documented history. You can look it up. But then it happens. Good old human beings step in and mess everything up like they always do because we suck. Now, for real though, what happens is empires grow and they prosper with a solid monetary system with real money, which is precious metals. Although a growing empire means growing militaries, growing social programs, and this is all very expensive. And eventually what happens is war, and you have to use that military, which is the most expensive part of all. Then we do that human being thing, and we start debasing the currency, because we don't have enough real money to fund all of the new expenses. So we start creating partly fake money into eventually totally fake money, which is known as fiat currency. If you're not following me, let me give you some specific examples. What starts as a 100% gold coin eventually becomes 50% gold with worthless metals mixed in, eventually 25% gold. Expenses keep piling up, eventually it's 10% gold, until eventually it's totally worthless metals making up the money that was once pure gold and silver. Eventually, it's fake money. This is a problem. There is then no real value behind the currency being created, especially since they can print as much of it as they want when this happens. Now, back then, when you're talking the Lydia times, Roman times, the proper term would be coining for coins. We now say printing because of the introduction of paper money. All of the money printing leads to inflation and eventually hyperinflation. This causes people to lose faith in the currency, and this leads to the collapse of the empire and a rush back into gold and silver or real money. Ding, ding, ding. It's important to understand why precious metals work so well as real money, better than anything else. The first reason is scarcity. They are rare and they can't be easily replicated or produced. Number 2 is durability. They can withstand wear and tear over time and hold up very well. Number 3 is divisibility. They can be divided into smaller values without losing their value, which is needed for making different size purchases. Number 4 is portability. Relative to their value, they're easy to transport and store, making them convenient for trade. Number 5 is intrinsic value. We talked about this a little bit earlier. They have tons of practical uses like electronics, solar panels, and everything else I named, plus more. Number 6, acceptability. They've been historically accepted and have worked as money and a medium of exchange. They've been tried and tested. Number 7, uniformity. Each unit of precious metal is the same as every other unit, making it simple to verify and measure. Last one, number 8, security. Precious metals are difficult to counterfeit, adding a layer of security and trust. These unique properties together is what makes precious metals so valuable. If you think about this, there is nothing else on Earth we found that can do the above things better than precious metals. You name something in the comments you think is better, and I'll list all the reasons why it's not. This is one of the things that makes precious metals so valuable. The unique properties that I just listed make them the best fit for using for real money. Let's go on another note here. We abandoned the gold standard, or the need to have precious metals backing our currency, in 1971. Before then, newsflash, our nickels and dimes and quarters had real silver in them. 100% silver at one time, down to 40% silver by the late 1960s, and by 1970, they were replaced by a copper-nickel clad composition. The exact same thing that happened in empires before us, all of which failed, going to a fiat currency. And can you guess what has happened since 1971? This is what happened. Our debt went from virtually nothing to now being almost $34 trillion. And look how quickly it rose. And look how it keeps going up faster and faster. We accumulated $8 trillion of debt in the last 4 years alone. That's almost a quarter of our national debt over the last 200 plus years, made in just 4 years. And it keeps going up faster. That is called unsustainable. Actually, the proper name for it would be a complete storm. The greedy use of fiat currency for the last 50 years is at its tipping point, and there is no fixing this. I have other videos going much deeper on this topic, but I have more to cover, so I don't want to get too much deeper on this history subject. Make sure you subscribe to get further education on all the things I'm talking about and more. This is super, super important. I'll tell you what, if I was an alien, right, and I was like watching a movie on the history of human beings on Earth, and I was looking at this specifically, I'd be thinking one thing: dummies, you keep making the same mistake over and over and over again. And hell, you don't even have to go that far back in history to get specific warnings. Some of our smartest founding fathers, like George Washington, Thomas Jefferson, they warned us. No, like, it's actually documented. They warned us against going to a fiat currency. There's many documented quotes from them and other of our great founding fathers, because they experienced the aftermath of the Revolutionary War, where large amounts of currency were printed to fund the war. They experienced what that did to the country firsthand. They experienced the effects of hyperinflation, the rebellions, the riots, the chaos. But did we listen? Nope. Dummies. So that's reason number 1 to start investing in these right now. There's links in the descriptions below. I highly recommend you check those out, whether you're interested in a gold IRA or buying physical gold. Both links will lead you to a 100% free investment kit. They have some awesome education and information in them. But let's get to some other areas and other reasons why you should be buying these right now. Maybe the history thing isn't enough for you. Not sure how it wouldn't be, but that's okay. Because we could forget everything I just talked about and just go off the following information. And I'm positive you'll see how gold is going to explode off of the following alone. Point 1 was more history-based. These points are more economics-based. There's 3 sectors that really hold up our economy. There's the real estate market, there's the stock market, and there's the bond market, or the debt markets. Typically, when one of these sectors isn't doing good, precious metals do very well. Let me spoil things for you. All 3 sectors of the economy are in some serious trouble. Let's start with real estate. Now, obviously, the prices of things are going to go up over time as more currency enters the economy. You know about inflation, right? If we divide the asset price by the amount of currency growth, it gives you the real value of something over time. That's the real home price index. The home prices adjusted for inflation should really be close to 100 in this graph. Notice where things were in 2008, about the 190 90 range, right? Of course, we crashed with the 2008 financial crisis because of this number being so high, and we went down to about 130, but we never fully reset. We are technically still in a continuation from 2008. And now we are worse than we were in 2008. We are currently in the worst real estate bubble in history. And that's not the only chart I can show you for this. Here is a chart on the home price to median household income ratio. This basically measures affordability. Now, people used to pay a little over 4 years of their income to buy a house from 1970 to about 2000. When the 2008 bubble popped, they were paying about 6 3/4 years of their income. Then, of course, we crashed because, as with the other chart, this is way too high. Well, now people are paying almost 7.5 years of their income to buy a house. This is outrageous. And by the way, this is all just measuring residential real estate. Commercial real estate is in serious trouble as well. The 2008 crash was pretty darn bad, and it was essentially put in motion due to the problems in residential real estate alone. Now the residential is worse and commercial is involved. And we haven't even talked about the bond and stock market yet. You want to know what this did from 2007 to 2011 during this time? It more than 2 times. And that was based off the problems in the residential real estate sector alone. This one is going to be way worse. And again, like I just mentioned, we haven't even talked about the bond and stock market yet. Are you starting to maybe see why you need to be buying these like right now? Comment. Let me know if you're starting to believe. Whether you want to roll some of your 401k over to a gold IRA, buy physical metals, or both like I do, get yourself educated. The links are below. 100% free kits. There's no catch, no credit card information asked for, nothing. Just get educated. And I don't want to be hearing any comments a year or 2 from now complaining how you have to now live in mommy and daddy's basement because you didn't listen to us and you lost 80% of your 401k when you could have 5 to 10x'd. Before I cover the bond and the stock market, understand this. I'm not necessarily some big precious metals advocate. I'm an advocate of investing in the right thing at the right time, and it's precious metals time right now. Markets go through cycles, and it's just that time for precious metals. If you don't understand this, you're likely going to lose your ass. Investing is very simple if you take out the emotion, the fear, the excitement, the greed. You eliminate those things and investing is actually pretty simple. Let me show you what I mean. Let's take a look at the stock market. Your typical financial advisor is going to tell you that just keep putting money into the stock market, right? They always go up over time. We hear this all the time from financial advisors. And in a way, that is true. But people think stocks are this magic bullet that is safe and is always going to be going up and it's always a good return on investment. That is not true. Look from the year 2000 to the year 2013. Stocks gained no value in 13 years. So if you invested in a bunch of stocks in 2000, by 2013, they would have been worth the same thing. And you factor in inflation, you lost your damn ass. Gold whooped the stock market's ass from 2000 to 2013. Same in the 1970s. The stock market did virtually nothing throughout the 1970s compared to gold. Let me show you a chart of what gold did during the 1970s. The gold price was about $36 in 1970 and went to $615 in 1980. It actually went a little higher, but that was probably the end of 1980. That's a 17x investment in 10 years. These are essentially market cycles, right? You sell at the top, you buy at the bottom. Let's go back and look at the stock market again, this time focusing over the last 10 to 15 years or so. What do we see here? A massive run over the last 10 to 15 years. Yes, stocks were a fantastic investment during this time, but there's a couple things to understand. The first thing is that this bull run was artificially inflated by all the money printing we've done over the last 10 to 15 years. Over 70% of our nation's debt came from the last 10 to 15 years of money printing. Out of almost 240 years, 70% of our national debt came from the last 10 to 15 years alone. You'd be blind to not see that it is artificially inflating the stock market. And let me tell you a little secret about investing. 90% of people invest at the top or near the peak of a bull run. Why is this? Because after years of seeing good news about a certain sector, they get comfortable with it and they start getting confidence in it. They get sold the notion that it's just going to keep going up. So they put their money in and then the bottom falls out. And then a lot of people actually sell at the bottom, which is the complete opposite of what you want to do. The same thing just happened with with Bitcoin when it got to the 50,000s and into the low 60,000s. Smart money left, dumb money entered at the top. Guys, we are at the top or very close to the top in the stock market. Don't be a victim to this phenomenon. Roll that money out of your 401k into precious metals, at least a portion of it. You did very well with your 401k being in stocks the last 15 years, so it's comfortable. Smart money rolls into precious metals, watches them skyrocket as the stock market crashes, and then they re-roll back into the stock market before the next run-up. It's called cycling. Of course, to get information on when that is coming, you have to subscribe because we are a long way from knowing when that's going to be. And it's the same thing with precious metals, right? People look at the last 15 years and they say,
well, precious metals have done virtually nothing.
Yes, perfect. That's exactly what I want. That means they are due for a bull run, especially since their counterparts are all showing major signs of a pending crash. So let's move over to the bond market. Epic run. The bond or the debt market just went on an absolute tear, but it's over. The 30-year bond is down like 53% last time I looked. The current collapse in treasury bonds now ranks among the worst market crashes in history. And this is like the heart of our economy. Our economy runs off debt. And this video is already pretty long, so I'm not going to go super deep into the bond market because it could be hours on its own, but I'll shoot videos specifically on the bond market and explain how our economy runs off debt. So of course, make sure you subscribe. What you need to know is the three counterparts to precious metals, these bars right here, are all falling all at once. Typically, when one of these falls, gold goes way up. But with all three falling at the same time, this is like the perfect storm. For those of you that truly understand all of this, you know this is an extremely scary time. A lot of people are going to lose a lot of money. I challenge you to take the emotion out. Educate yourself. Use the links in the description for a free kit. These kits have absolutely awesome information in them and they lay it out much better than I can myself. If you don't want to get it from my recommendations, go find it somewhere else with a different company. I don't care. Just get educated. And the people holding these, Pam and kids, whether physically or in an IRA, are going to kick some serious ass. I know it's super comfortable having your traditional 401k. Totally get it. It's been doing well for 15 years now. Totally get it. But the time is over for the stocks. Take your profits, roll them over. I'm not saying you have to do the whole thing. Do a portion and put a protection plan in place for yourself. Even if you do something like a 25% rollover into precious metals. If the stock market does crash like 80%, like some people are saying it will, precious metals has a good chance of likely 5 to 10xing. That means instead of losing 80% of your retirement savings, you actually end up 2 to 3xing your money. Of course, how aggressive you want to be is up to you. And look, they don't have to be Pamp Suisse Gold bars. I'm down with any gold. Although the Pamp Suisse Gold bars are great because they're trusted, but that's just a different topic for a different day. Get yourself educated, get started.